This is part 3, and it covers the cash flow statement and the section that deals with operating activities, and we're looking at the direct method. Now again, there are two formats. One is the direct, which is what we're going to go over, which reports the cash effects of each operating activity. And then in another part we cover the indirect method, which starts with accrual net income and converts that to cash. Regardless of the method you use, you will get exactly the same answer whether you use the direct method or the indirect method for the operating activity section of the cash flow statement. Now, the direct method. You're going to adjust each of the following items from the accrual basis to the cash basis. So, cash received from customers, and then you're going to subtract. Remember, you have to subtract this item from cash received or you're not going to get it correct on your homework. Supplies, operating activities, and net income. And income tax. That gives you net cash provided by operating activities. Now, you can look at that for a few more minutes. That's the format we're going to use. And now what we're going to do is we're going to look at a balance sheet and income statement. We need both of those. And remember, the cash flow statement is always prepared last because you need the balance sheet for 2 years, including the current year, and you need the current year income statement, and also you need information about some other items. So you need, this is your last one you prepare. So here is our balance sheet, and now what we're going to do is use the information here to do our cash flow doing the direct method. And here is our income statement. So first we're going to compute net cash provided by operating activities under the direct method. Step 1, determine cash receipts from customers. 2 accounts are going to be involved. We have to analyze sales and we have to adjust for changes in accounts receivable. We have sales, and now what we have to do is adjust for the change in accounts receivable. We had a beginning balance of $130, an ending of $155, which means that $25,000 of the sales we're showing was not collected. So that means we have to back it out. And so our cash receipts from customers is $925. That's what we're going to use as our first line item. So we go to our form and we get $925. Next, we're going to look at supplies. Now, I like to do it this way. You can do it any way you want. I always go to my 3T accounts that would affect supplies because the supplies we're talking about are always supplies based on inventory. And if it's not, they'll tell you that. Accounts payable usually. Okay, so what I would do is I would put my cost of goods sold, that would have come from my income statement, and then I would put in my beginning and ending balance for my inventory, and my beginning and ending balance for accounts payable. And I don't know why I didn't put it here, but it will appear later on when we walk through this. Now, the first thing you want to remember is how things flow through the financial statements. So in this case right here, what we're going to do is we know that when we debit cost of goods sold, we would have credited inventory. So we would have had a credit to inventory. Next, we're going to try to determine, okay, well, how much did we add to inventory? We know we started with 61, we reduced it by 600,000, and we ended with 75. So, you would take the 75 plus the 600,000 minus the 61, and our amount would be 614,000 was purchases to inventory. Now, what you always want to do is check your answer. So, I go back and I do the 61,000 plus the 614 minus the 600,000 that went to cost of goods sold, and that gives me an ending balance of 75,000, which means I know I've done it correctly. So always check. Now we're going to put that 614 in accounts payable because we know that if we debited that, we would have credited the other one. Now what I'm going to do is add that ending balance, and now we can determine the payments. So we take the 60,000 plus the 614 minus the ending balance, which tells us that this is how much we had in payments. Now again, you always want to check. So go back and with your calculator, take the 60,000 plus the 614, subtract 608, and make sure that gives you 66,000. And then you'll know you've done it correctly. So again, two things whenever you're doing your homework. Number one, read the problem carefully to make sure that you really understand exactly what they're telling you. Number two, always check your accounting numbers twice to make sure you did it correctly, especially if it comes back and tells you it's wrong. Okay, so now we've got cash to suppliers. Now we're going to look at operating activities. We have accumulated depreciation. What we need to do is look at the change. So what I did is added both the building and the equipment together for one account, and that tells me that's my beginning balance was 42. I know that I had 58,000 as the ending balance. Again, I added them together. I also know that it told me that the accumulated we sold a piece of equipment, and we know when we do that, we must take that accumulated depreciation off the books. And it said it was 40% depreciated, so we know that we would have taken 6,000 out of accumulated depreciation, and then we solve for, we take the 42 minus the 6, and then we check to see, we take 42 plus 22 minus the 6 gives us the 58. We know we've done it correctly. So, operating expenses were $250. That's what shows up on the income statement. But now what we have to do is we have to adjust for the depreciation, and the other thing we have to adjust for is the allowance for doubtfuls. Now, we do it here because what it means is that if allowance for doubtfuls went up by $2,000, what that means is we have $2,000 as bad debt expense that is not related to cash. So what we have to do is subtract those out. So this tells us our cash payments for operating activities is $226. Now the last thing we need to do is we need to look at income tax. Now let me go back and so you can see what that looks like for a minute. And now I'll go here. I'm trying not to go fast. Now, oh, wrong way. Okay, here we go. Income tax. Again, I like doing a T account. I show my beginning balance. I show my ending balance. And I know that income tax expense was $45,000, so that can tell me this. I take my $10,000 plus my $45,000 minus the ending balance, which means the cash I paid for income tax payable is $43,000. Now I can go back, take a look at that. Now, here is what I get. Net cash flow provided by operating activities, and that's how you do the direct method.